In this video, we're going to talk about market behavior and how we can use price action rules to help us identify high probability setups. Today, we had a gap formation on the chart. This is the Friday's close and this is the Monday's open, and we can see that there's a gap on the chart. And even though this represents a valid bearish leg down, this is an empty space and traders like to see this gap filled. So your target and your goal for the day is to see price eventually filling this gap. It's not the rule that is set in stone, but a lot of times that's how price likes to react. Today's structure was bullish uptrend. We can see that the price is creating a series of high highs and high lows. So what you want to do is you want to identify a pattern, because price is always in some form of pattern. And how do we identify a channel like this? Well, a lot of times your trend line is going to be identified from the very first two swings. These first two swings set up the trend line, and this third swing confirmed it, and we can see there are multiple confirmations along the way. So this tells you that the uptrend is valid. So once you see a bullish structure like this and we have a break of the uptrend, according to trendline rules, we don't start counter trading yet. We expect for price to create a new high, because that's what traders will most likely going to be expecting. After a break, you expect for price to create a new extreme. So once you see a price pushing lower like this, you need to resist the urge to focus more on the downtrend, because price can continue creating a new high, because this was the bigger pattern and bigger pattern takes precedence. So once you see a bearish move down, you cannot make the trend line wider like this. You need to focus on the short-term patterns. And we can see that there's a downtrend working lower, there is a break, a new extreme form. So the trend line rules apply even for the short-term patterns. Also, we can see that if you measure this leg and you copy it, we have almost to the very thick measured leg down. This is the first leg, little correction, and this is the second leg down. This is a two-legged pullback. Market likes to move in pairs of twos. So once you see a two legs down, this tells you that this downtrend correction is over, and I'm safe to expect and assume the price can create a new extreme. But how do I know that the new extreme is going to be tested? I observe how price is pushing above EMA, and we have a strong push above EMA. So once I see a strong push above EMA, this is good indication that the previous uptrend is truly resuming. This is why we have the EMA on the chart. It is an indicator, yes, but it is just a supportive indicator. All the information you need is to see price pushing above the EMA, and it's all the information you need that the uptrend is resuming. So what is the high probability setup? How do I jump on board if I want to see a price create new extreme, but I don't know which setup is the high probability one? Well, we just saw that price likes to move in pairs of twos. So the high probability setup is going to be a failed second entry short under the right context at the proper key entry point. So since the price is pushing above EMA, we have a first entry short right here, pullback, second attempt to sell right here. So there's a second entry short, but it's above exponential moving average. So that's not good for sellers. Since we are above EMA, I want this second entry short to fail, and there's a failed second entry short at the proper key entry point at the EMA, and even at the potential trend line as well. So everybody who went short here on a second entry short, because market likes to move in pairs of twos, the context is slightly off. And this was my first trade for the day. Now I came in a little bit late. I didn't manage to get in this trade right when it formed. I dropped my limit order once I saw price pulling back like this. So I dropped my limit order. Fortunately, got instantly out and my target profit was hit. But you guys can see that there was additional little trap even to the short side, because there was a big bearish bar. It ticked one tick lower, all these orders got filled, and it instantly reversed back up. So this was a continuation of this failed second entry short, and we can treat it as a high low, and this was a quick easy move. And you still expect for price to create new extreme, because that's the bigger pattern. Okay, so after price created a new high, this is the highest point, and now what's going to be a high probability setup, because you still don't have a new high. This is the high of the uptrend. This is the highest point of the uptrend, so you still need to create a new extreme. High probability setup is going to be a two-legged pullback at the key entry point, and we can see a new high. This is the highest swing, because we have a lower high here on the left and lower high on the right. So this is the pivot high. We have a first entry long, pullback, second entry long, two-legged pullback. Market likes to move in pairs of twos. Also downtrend played out with the break and the new extreme. This is a great high probability setup. It's at the exponential moving average, and you expect even new high for this uptrend. Simple price action, nothing complicated. You're using the structure to help you predict where the market is going to go. Now, I didn't take this trade because this was right at the open and the market got really fast, quite spooky, and I should have taken this trade, but once the market is at the open, I was kind of respecting it. I was playing it a little bit too safe. Market created a new high, pull back another new high, and there's additional correction. Now we can see that there is a new high, first entry long, second entry long as well. So another two-legged pullback, and price still needs to create a new extreme. But here we have a downtrend working lower, we have a break, and we don't have a new low yet. For that reason, I'm not going to mark it. I would like to see at least attempt to create new extreme. Definitely the entry is not bad because the context is still bullish. If I zoom out, there's a still bullish structure. We still need a new high for the overall pattern. So that's the target. Also, you expect for gap to be filled. So you have multiple reasons to assume that the price is going to go higher. Once you have a above EMA and you have a high low confirmation of this initial two-legged pullback, EMA keeps holding price. This is a much safer entry, nice big bullish bar, and market continue pushing higher. So you're not chasing the market when it's in the middle of no man's land and there are no entries. You're focused on the high probability setups. Now, once the market is pushing higher, you can find a few additional patterns, spike and a channel pattern. You have a break, new extreme, and even you have a new extreme for this overall pattern. So from this point on, you expect correction or straight up reversal after price action rules played out, after trendline rules played out. And this was my second trade and my first losing trade for the day. And this was, to be honest with you, completely mental mistake, an impulsive entry. I don't know what I was thinking. Once I took it, I instantly knew, made an impulsive entry, because I even told myself that we have a break and a new high, so we expect correction. And I'm not expecting reversal because I know that the structure is bullish. We still are pushing quite above EMA strongly. So I knew I'm just going to let the correction play out, and I'm just gonna jump back on board with longs. But for some reason, I just took a long because it was a two-legged pullback, big bullish bar coming off the EMA. It was an impulsive entry. That can happen. Sometimes you will just have a complete brain freeze and you will take entry like that. So I instantly knew I screwed up. Once you have a new extremes for two trends, you really want for price to expand. And this is the typical two-legged pullback at the very end of the trend. This is a typical beginner entry. But that happens. Sometimes you feel a little bit rusty. I feel a little bit rusty today. I wasn't reading it properly the entire time. I couldn't really find the bigger pattern properly, but it happens. Nothing you can do. That's part with trading, and there are a lot of opportunities to make it back. So you just shake it off and you continue focus on the price action as it's unfolding. So since there is a price pushing lower, you may be wondering, why am I drawing a wider pattern like this, and why am I not drawing a pattern, the correction like this? Well, it's because this is the new high. So we expect correction or reversal. If I'm going to draw this tight like this, I expect that the uptrend is still in play, but this is no longer just a correction. Here we have reversal potentially happening because the new high is formed. So for that reason, we need to draw the channel slightly wider. And there's a downtrend pushing lower, little overshoot that leads to a break or straight up reversal. This time it led to a break, attempt to create new extreme, and strong push above EMA. And this is important because you would expect after new high, price really pushing lower if there are strong bears present, but we have pushed above EMA, once again confirming the bullish momentum. And if you zoom out, you can see that the price keeps just working higher. We keep pushing above EMA. We just got below EMA twice and we instantly reverse back up. So this is the tricky area. At the same time, you need to respect the resistance, but you cannot go short just yet. And this is the area on the chart when it's okay to not do anything. It's completely okay to not take any sell and not take any buy. Because if you sell too early, you're going to get trapped. If you're going to go long too early, you're going to trap as well. You have a key level, you have an EMA, you have a confluence of two contradictory key entry points. So you're just being patient. You don't want to guess and you don't want to cherry pick. As price is pushing higher and you keep making series of high highs and high lows, there's a bigger pattern that can be identified. Something like this. And there's a break above the important key level and push back, because most breakouts of the key level will fail. So there's a break above resistance and it failed, it pulled back, but we can see that there's a new high, first entry long, pull back, second entry long. Why did I mark this trade even though it's right close to this trend line? If this is a failed breakout and this failed breakout is strong and bears are strong, you're going to push at least below EMA. But take a look what happened. There's a first entry long, there's a lower high that closed still at the level of EMA, didn't manage to push below, and they trapped everybody and it's reversed back above EMA. This is a good indication that this is going to be a short trap because price couldn't even make it below EMA, let alone create a failed second entry long. So this is a little bit advanced entry. You definitely can be patient here and not take any entry because it's getting very wedgy. But if you break above the key level like this, pull back, and it's now holding, it's basically acting as a support. This is breakout pullback area, second entry long, downtrend played out with the break and a new extreme as well. So the downtrend played out really quickly and the trend line is being present. bar is so small that you can afford to take a long entry at this point. On the market created a high and is now correcting, pushing lower. So once you see price correcting, pushing lower, you're going to draw the short-term trend line. And once you see market pushing lower like this, simple price action. You're looking for two-legged pullbacks, second entry shorts at the key entry point. But there is no second entry short just yet. I'm just going to quickly draw my support like this, because we can see there's a one low, second low, third low, and overall this is looking very trading range like. So there's a market pushing lower, but there is no chance to sell a second entry short. There's just trend line keeps holding and all the first entries are working. However, that's not what this strategy is based on, so you cannot pull the trigger. There's a break, new extreme form, which tells you that the downtrend is over. Break, new extreme form, so you expect correction or straight up reversal. How do I know it's going to be correction or reversal? The same thing right here. I'm just going to expect how EMA reacts. And there's a strong push above EMA and back into this trading range. And we have a new low, first entry short, pull back, second entry short, failure. Also, we have a new high, first entry long, pull back, second entry long. EMA keeps holding. The support keeps holding as well now, because you have a confluence of two key entry points. You have an EMA, you have the support, and you wouldn't have this trend line yet. All you would see is this short-term trend line right here. So you wouldn't have this trend line yet. So you have two key entry points. And once you have this failed second entry short and a second entry long, once you have two high probability setups in one, the setup is even stronger. And think about the context. Downtrend played out with the break and a new low. And since you're coming from the failed breakout, you expect for price to get from the support back above to the resistance. So the context is on your side. Is nice two-legged pullback. And this was actually a little bit tricky trade, because when I was watching this and we had such a strong bearish move down, I almost figured that we may not even get a second entry long, and we may continue pushing lower, because the price pushed strongly below EMA and it looked like the second entry long may not form. But at the very last second, there was a strong bullish momentum and we managed to close so sharply above EMA. And I don't think you would get into this trade. I tried to enter with the limit order, but it really happened in split second. And a lot of bars today formed like that at the last second, in split second formed. But great entry context wise. Now the market is pushing higher. If you take a look back on the price action, we can see that we are still creating higher highs, higher lows constantly. There is no strong downtrend. This was the only downtrend that took a little bit of a presence, but this was still a very short-term downtrend. All these uptrends are wide, they're broad, they're large, and this was the only very tight and short-term downtrend that was present, and you instantly pushed back above EMA. So this tells you that the structure is still very bearish. So once I see price pushing higher like this, I still now expect for price to give me a second entry long at the key entry point or some decent failed second entry short. There is a new high, first entry long, pullback, second entry long, coming from two key entry points. If I want to know that the entry is safe to sell, safe to buy, I'm going to draw my short-term trend line. There's a little break, new extreme form, and it instantly reversed. This is a great second entry long, but unfortunately the bar is very, very big. I was preparing my limit order, and as the bar was forming, I was tracking the limit order. Once it's going to close, I'm going to instantly drop it. But once it was getting close to being finished, it kept pushing higher and kept pushing higher, and it ended up being 8-point bar almost. So unfortunately unenterable due to size, but this would be a great second entry long because the structure is now very, very bullish. Now once you see a bullish structure like this, once again, not overcomplicating, you're looking for second entry longs at the key entry point. There's a new high, there's a first entry long, pullback, second entry long. I actually forgot to mark it, but this is a second entry long with the direction of a trend at two key entry points. Price pushed lower, and at the very end of the bar, everybody started buying and bar managed to close above EMA, such a strong bullish reversal bar. Key entry points are holding, structure is still bullish, so this is a great entry. When I was watching this live, to me it felt a little bit too overbought and a little bit too steep. I was expecting a little bit deeper correction, but looking back, I probably overanalyzed this, and this is a great two-legged pullback. It's really nice here that price truly managed to create new extreme. There are a few matching lows, you pushed lower, instantly reversed back up above the EMA, so this is a great second entry long. What I did, I like to wait for the high-low confirmation. Same thing right here, basically. You have a similar pattern. You have a second entry long, and if you're not sure because of the trend line or other instances, you wait for price to give you a confirmation of high low, and this is what high low is for. When you're not sure about the price action, when you're not sure whether you're reading it properly, the trend line valid, you just wait for a higher low. Of course, you pay the price that you're entering higher than you would have entered on the first entry. This is what market is doing if you want additional information. If you want additional information from the market, you're going to have to pay for it, and you pay for it in the form of entering a little bit higher than you would on the initial entry. But if the structure and context is still good, it's still 100% worth it and a high probability setup. So once price pushed above EMA, trapped all the shorts, key entry points are still holding, big bullish bar. This was my third trade for the day. This is the trade that I took. Unfortunately, the runner got instantly stopped, but this was a higher low confirmation of this two-legged pullback. And remember, structure is still bullish, so you're not overcomplicating it. You're looking for simple price action entries. Price is pushing higher, new high formed, first entry long, pullback, second entry long. There is a break of the downtrend, new extreme form. I'm just going to make it a little bit cleaner like this. Break of a downtrend, new extreme form, telling you that the downtrend is most likely over. You take a couple ticks lower, instantly reverse up. You know that a lot of traders got probably trapped going short below this gigantic bearish bar in such a bullish structure, because if you zoom out like this, you have to keep constantly zooming out so you can remind yourself of the pattern. If you zoom out like this and take a look at a structure like this, this is a still strong bullish structure. So you're not thinking about picking a top, you're not thinking about selling. Only thing you're just looking for is for the correction to play out and to take a high probability entry with the direction of the trend, which is long. So the correction played out with the break new low, two legs down, and this is a strong bullish reversal bar that closed above EMA. Great second entry long. Unfortunately, once again, similar story to here, couldn't be entered. It happened extremely quickly, but market created a high low entry. EMA keeps holding price. When I was watching this live, I was even having a spike and a channel, something like this, a spike and a channel. It looked really nicely, like it's fitting well, but we ended up pushing even higher and higher, and it actually may even be a little bit overshoot, but I think it's more like a little break and the new extreme. So there's a similar pattern, high low confirmation of two-legged pullback, basically a repeat pattern. Perfect. You guys can see that just you're looking for these simple patterns, nothing too overcomplicated. And market is pushing higher, and market is pushing higher. When I see a strong structure like this, I'm still thinking long bias. But here's where the gap is coming into play. If I'm going to mark the opening for the gap, we can see that the price took its sweet time, but eventually managed to fill the gap. And this is the beauty in price action. And once the gap was filled, that was enough reason for traders to expect the little correction is going to follow, or they can start taking profits. For whatever reason, we don't really care. All we care about is the market is moving, but the gap was filled perfectly and market started pushing lower and lower. So the market is right now changing gears, and I'm going to hide this channel right here. Once price is pushing lower like this, and this is a strong big bearish leg down, EMA is now pointing down. We're making series of lower highs, lower lows. You can see that we have a downtrend working lower. So according to trendline rules, there's a break, new extreme, which is okay. But after new extreme is formed, we are expecting correction or straight up reversal. And you have a new low, first entry short, little pullback, second entry short. Now notice I didn't mark this second entry short. Why? Because you just had a break and a new extreme form. And even though it's definitely in ballpark of being a decent entry, it's not a bad entry by any means, because when the second entry played out with the break and new extreme, it's close to EMA, and you take one tick higher and still reverse down, you definitely can still treat it as a decent entry. However, it's not the high probability setup because downtrend already had a break and a new low, so you don't want to be gambling, you don't want to be cherry picking. You need to follow the price action, and since you have a break and a new low, you never know if you're going to create additional move up. But if you're a little bit patient, you can get additional entries that are going to be a high probability setup as well, because once price pushed lower and created another new low, I give you a first entry short pullback, second entry short, uptrend played out with the break and new extreme, and this is the first leg pullback, second leg. So this is a two-legged pullback, high probability setup, second entry short at two key entry points. EMA is holding price, great bearish reversal bar. You actually worked higher, touched the EMA at the very end of the bar. Everybody started selling and it resulted into this nice bearish reversal pin bar. So this is a great two-legged pullback, second entry short. Overall structure is now down, and this is the simple price action setup. There's actually, because you reset the count after two-legged pullback, so since this is the new high, you have a first entry long, second entry long failure, and you also have a micro second entry short. This would have been also a great entry. Me personally, I just don't like going short directly into a low of the move like that. But you can see that still price is respecting the trend line. It is such a strong momentum bar. So you can definitely make a case for going short here. Me personally, I just believe it's a little bit safer always to have at least some room to the previous swing low at this point on. You're basically going short directly at the low of this entire move. And that's, even though this is such a nice trap, that's never too safe. You have a break, new extreme, so price is reversing higher. An unexpected strong push above EMA for that matter, followed by a break, new extreme. You're drawing the short-term trend lines. And if you're struggling to find, and I'm going to talk about it a little bit, I was looking for bigger patterns a lot today. And I was looking for, first I was looking for uptrend like this. Then I ended up looking for uptrend like this. And you can even see that it's quite holding price here nicely. But none of these bigger patterns really came into play. And when you're struggling to find a bigger patterns like this, all you're focusing on is the shortened trend lines, shortened patterns, and they will give you all the information you need. All of these good entries can be identified by just following short-term price action and taking the overall bias into consideration. Because there's a break in a new extreme and there's a strong push below EMA, so this uptrend is over with the break new extreme. Push above EMA is indicating bearish momentum. There's a new high, first entry long, push below EMA confirming bearish momentum, second entry long, failure. Two failed attempts in the direction of a previous trend which was bullish that played out. So this is a high probability setup. You're still below EMA inside this trend line. This was my last trade for the day. A great failed second entry long, big bearish bar. Price created a break, new extreme. So the downtrend played out and you have a correction. And notice you have a new low, first entry short, second entry short. But I'm not going to mark this entry because there's a nicely fitting short-term uptrend being in play. You cannot cherry pick. If you want to have consistent results, you should be following your rules as much as you can, and you're supposed to have objective system as much as you can. So even though it's a decent entry, once again, because it ticked higher, instantly snapped back below EMA, big bearish bar, and you know everybody probably went along here on the higher low and they get trapped. You really need to be respecting the trend line. It's really fitting nicely, and you never know when you're going to get a break and a new extreme, which you truly did. There is a break. There's the first leg to a new extreme, little pullback, second leg to a new extreme. And look what formation price created. While the price is pushing and creating a new extreme, EMA is starting to get flat. You have a triple bottom and triple top. So this is now a consolidation. And how you trade consolidation? The same way as you trade trading ranges. You either buy low, sell high, or you fail the breakouts. And there's a breakout to the upside that came back and pulled back into the consolidation. Typical perfect price action. This would have been marked by a red arrow as a high probability setup, but unfortunately the bar is too big and you cannot enter this safely because you're already going short at the very low of the move, 6 to 7 point stop loss, I believe. So unfortunately you cannot take this entry, but this would be a great entry context wise. Then it is a little bit indecision market. It's pushing higher, pushing lower, and by the time you created a move down, and this also led for me to take this short right here, is there is now a trading range being formed, something like this. And you can find this trading range once the price is pushing below EMA like this. Generally, you can have 3 moves to identify a trading range. If you're really experienced and you really understand price action, just 2 moves are enough because you see 1 move down, 1 move up. So you can identify a trading range, but you have a move down, move up. And once you have a push below EMA and a third move down is starting, that's how you can identify the prices starting to swing up and down through the EMA. EMA is starting to get flat. So now this is a trading range. So you're coming from the top, heading to the bottom. And once you're pushing strongly down like this, we keep making a series of lower highs and lower lows constantly. So you know there's probably a bigger pattern being present. So this was the pattern that was present. Strong push down below EMA. You're still going to draw the short-term trend line. And look what you have. There's the new low, first entry short, pull back, second entry short. I marked this trade because this is a really great entry. This is a 2-legged pullback at the key entry point. And notice how you ticked higher, it's the reverse down, big bearish bar confirming really bearish momentum. You have a break of this short-term downtrend, so you expect new extreme to be formed. So even though you're coming from the lows, you pretty much cannot neglect such a nice second entry short when it's looking like a strong bearish bar. And you still expect new extreme to be formed. EMA keeps holding price, and overall pattern is still pretty bearish. So this is a great entry mark. You need a break, new extreme, but it's above EMA and it pulled back below the EMA. And this is a good information because if you're going to bounce from the lower trend line, you're going to head to the upper trend line, you're most likely not going to pull back below EMA. In this instance, it stalled little bit, but normally it will push straight up. So once you see price pushing below EMA like this, you have a lower high, which confirm the bearish momentum because you have a break in your extreme, an additional push below EMA. So this lower high is decent entry. It worked for a scalp. And then you have a new high right here after breaking a new high right here. First entry long, pullback, second entry long, failure. And you have a new low, first entry short, pullback, second entry short. So you have two high probability setups in one. Notice how EMA keeps holding price, and this would have been a losing trade. What you would have been doing here is you would have been witnessing the stop getting stopped by just one single tick and price instantly reversing back and creating the scalp you thought it would happen. Now we can see that price is really close to this bottom. This is starting to look like a trading range, and we can see there is very little room to the bottom. But still, for all of these reasons I mentioned, EMA keeps holding price, strong push below EMA, second entry short and fell second entry long, big bearish bar. I mean, a lot of times this entry will work. You have barely enough room for a scalp, and it would have worked. It just stalled a little bit. There was a one little fake out trap before eventually pushed lower, and you never know that that's going to happen. You have to follow the rules, and I believe that even though you're quite close to these lows, it is a still decent entry to take. We can see that there was a double bottom, and when the lower high bounced here back up, that was probably good enough information to be a little bit patient and stay away from here and not to force the issue. So price reverse higher. We have a break. Excuse me, we don't have a break. We have a new high. You have first entry long, pullback, second entry long. This would have been a great entry had there been some better signal bar. EMA keeps holding price, trend line keeps holding price, but the signal bar is bearish, and this is a horrible bullish theme. You cannot go long here. Unfortunately, there is no entry. There is a little break. Finally, price created a new extreme. I don't see any short at the same time. There's a new high, first entry long, second entry long, failure. Had it closed below EMA, this would have been great, but it's above EMA. Then you have only first entry short, so no entry. Broke the trend line, reverse back down, break, new extreme, push above EMA. You can see there are no setups. There are V-shaped reversals. So you're just following the short-term trend lines. That's all you can do. Price created the break, new extreme, but you still keep pushing above EMA. You have a new high, first entry long, pullback, second entry long. So this is the famous two-legged pullback at the key entry point, but price is already closing and it's way too late. All right, so when you see a gap, expect for price to filling the gap eventually. Once again, it's not the rule that is set in stone, but a lot of times traders like to see the gaps being filled. And today it worked like a clock, where once the gap was filled, the bottom basically took off. So hopefully the video was helpful, and I'm going to see you guys in the next one. Bye bye.